Howdy traders, FX Big Dog here and welcome to Friday's update. In the beginning of the week on Sunday we posted a video talking about the dollar and we said that the dollar is going to weaken this week, but we did say we're going to see some strength first in the dollar before we see some weakness. So what happened to the dollar this week? Well, we're going to talk about that in this video right after this. Well, welcome to Friday's session and Friday's update as we go ahead and address the week's trading. Hopefully everyone had a great week of trading. We did have some chaos in the week, some strong trends, and it wasn't just because of the dollar movement that we had. We also had a sell-off on crude oil. And with the sell-off, we saw that the Canadian crosses really moved. But we're going to go ahead and focusing more on the dollar, but we're going to talk about the US oil as well and how the markets were affected by it, specifically US dollar Canadian. We spoke about that. I have many positions in. So what's going on with the opportunities? What is going on with the trade? Let's go ahead and take a look at the details. So let's jump into the chart. But before we do that, I want to go ahead and remind everyone, if you have not subscribed to this channel already, please go ahead and do so. But also, very importantly, I would really appreciate it if everyone go ahead and smash the like button. If you want to see content like this continuously, please go ahead and smash the like button. I would love to get this video out there so everyone can go ahead and view it. So with that being said, let's go ahead and jump into the chart. And let's go take a look and see exactly what happened to the dollar index and how we can take advantage of this move that we've had this week as we head into next week's trading. Let's go take a look and see. Here is the chart. So if we go into the chart right here, one thing we want to go ahead and pay attention to is how the dollar index moved through this level of resistance. And so with that resistance over here being taken out, a lot of traders are thinking that the dollar's on its way up. Well, it could possibly be, but the one thing that we have to really look for right now is, although we did trade above that, price is going to come back to retest this level of resistance that's now going to become support. And if we do trade below that, then there's a good chance that price is going to come further back down south, take out the lows, and we're going to go back down to this trend line. So how do we identify that this is actually going to create an opportunity for us, right? And how do we know that we're really going to see some bearish dollar over the next few days as we head into next week? Well, the most important thing right here is that we have to make sure that we get proper confirmation. Right now, yes, it does look like we paused to go ahead and continue the rally, but there's going to be some dips towards that support. And if we do drop below that support, there's a very good chance that prices will continue to move down south. Now, we've got to look at the overall directional bias in order to understand what's going on. But let's go into some more details about the dollar index and then go ahead and take a look at some dollar crosses, specifically US dollar CAD. And I'm going to take a look at US oil as well. So let's go ahead and take a look and see what's going on here. So if you look over here, that's the confirmation we need. We need to break below that support level in order for price to continue further back down south. But I always like to go to some of the cross pairs and look at, like, for instance, US dollar CAD. Look at this big move on US dollar CAD. Now, we had this big rally, super cool, but then we've got this big wick. We've got this long wick to the upside. This is absolutely showing us that price has not maintained itself. Price has not managed to keep up at that level, especially looking at the dollar index. We're also seeing some sort of like big wick to the upside too. And so as we pay attention to these levels, these past resistance levels right here, we'll be looking for price to trade below that. Now, we may not get this in this candle. If we do, fantastic. If we drop further down south on this current candle and we drop back down here, we could absolutely see price coming back down to retest this level. And so what we'd be looking for on this is we'd be looking for some sort of confirmation, divergence. And if you go down to, let's say, a 1 hour time frame, we'll be able to see something right here. So if you look over here right at the top, we can certainly see that that the oscillator has been moving down. Although the price has been moving up, we have seen the oscillator move down, which means that this is running out of steam. It's starting to fade off the rallies, and we're starting to see the market drop back down south. So dollar, US dollar Canadian may very well be a great opportunity for traders to want to go ahead and start looking at the markets on Sunday as we trade into the week. All right, because it may be a very bearish week for US dollar CAD. But I think what's important right now is that we also go ahead and pay attention to US oil, specifically if we're looking at the US dollar CAD and see how the US dollar look at oil and see how US oil is faring. So let's go ahead and take a look at US oil. So I'm going to go to US oil right here, and we're going to see very similar things happening right here. Firstly, number one, let's go take a look at the swings going up. Now, if you notice that we have this big wedge that we were in for a long period of time, right? And we started breaking out of that wedge, and now it's coming back down to retest. But look at this. Look at the swings that we have going up. Here is a wave 1. Then we have a wave 2. We've got a wave 3 going up right here. And now it's coming back to a wave 4. Now, just for those that don't know, wave 4 is normally a very shallow retracement, and then it takes off and goes back up north again. So if we go deeper into this right here, I want you to look at a couple of things here. Do you notice anything here on the oscillators? Look at the oscillator below. The oscillator is showing us positive divergence, which means that price is actually looking to turn. There's a good chance that price can turn. So we've just got US oil drop down to a 62 level mark, right? 62 levels, or at least $62 dollars a barrel. Now, what does that mean? Well, it means nothing to some people, but when you look at technicals, it actually means something good. Let me go ahead and show you what I mean. If I go ahead and take a look at this retracement, firstly, let me educate you on something, right? The market can retrace in two sort of patterns. Either it's going to be in a zigzag pattern or it's going to be in a flat pattern. What is the difference between the two? Well, the zigzag pattern is a pattern that goes ahead and retraces in a wave sequence. It goes, let me show you on the charts. It's going to be a lot easier. It goes something like this. This is going to be a zigzag, right? Where price goes down in this format. Now you have the other, we spoke about the flat. There's two types of flats, right? So you have zigzag, one type of retracement pattern, and then you have another type of retracement pattern, which is called a flat. A flat could be in two shapes, an irregular or a running flat. All right. Now, how do we know the differences between the two? Well, a flat, normally when the market creates this high like we had right here, right? So this is the high there. Okay, that's the high. Normally when we create a high, what happens is price does this. Creates that high, and then it goes down, but then it goes up, takes out the previous high, and then it goes down and takes out the previous low. That's what we call an irregular flat. Now, if you look at this right here, this is not happening. We didn't have that irregular flat. In fact, if you take a look over here, we had a wave 1, wave 2, wave 3. Now, wave 4 came a little bit higher than a wave 1, which is, not something we'd like to see, but it didn't take out that wave 2 high right here. But it ended up going down here to give us a wave 5. Now, check this out. This is how I know it's a wave 5. If price goes down to 127, I know for sure that we're going to anticipate some sort of retracement move. Okay? So when I look at that, I look at this and I say, okay, well, let me put some fibs on this just to give me a proper confirmation. I'm going to go ahead and put my fibs on it from the top right here, all right, down all the way down to this level right here, right there. And so if I go ahead and spread it across, well, I don't need to, but you can see right here, where is price right now? Price is right there at the 127. Interesting, isn't it? Well, you see, the thing is, if it's at the 127, that means that we have completed one leg of a zigzag pattern. Let me explain a little bit more what that means. Okay, what it means is that price has done something like this. Price has gone into a zigzag pattern, but it's the first leg right here that we've just completed. That means that we're probably going to expect price to go back up and then go back down again. But it's going to move in a 5-3-5 sequence, something like this. All right. So a zigzag pattern is the overall pattern looks like this. But what you don't know is that there's 5 waves inside here. Let me see if I can change the color here so you can see it a little clearer. So it goes something like this. Wave 1, 2, 3, 4, 5. This is what we've just gone ahead and completed right here. So now what I'm expecting is price to go back up in a 1, 2, 3, all right, into a 1, 2, 3 pattern, and then back into another 1, 2, 3, 4, 5 wave cycle or wave structure. All right. So the structure is going to be, that's what we call it, a 5, 3, 5 structure, and it is in an irregular pattern. Now you might be saying, well, Big Dog, why is this so important? Well, why this is important is because you want to identify directional bias, and you want to identify something that's leading. All right, you don't want to trade, you don't want to depend on lagging indicators, but you want to have some leading indicators, something that's going to tell you in advance what's going to happen and where's the market to move. And you can use that to create your directional bias, which means that you can really start getting ready for a possible move. And start preparing yourself so when you start seeing the signs on the lower time frame, you can take advantage of that because you understand where the bigger picture is. You understand the bigger picture. And so if you understand where the bigger picture is, it's going to make your job a lot easier trading on the smaller time frames in that direction that gives you the highest probability to make good trades. So knowing this, knowing market cycles, knowing where these tops and bottoms are in the market helps us to identify directional bias. That's really what it is. So everything I'm talking about right now is just really for me to identify what my directional bias can look for. And you're probably saying, why are we looking at US oil? Well, because Canadian dollar is actually very much driven by the price of crude oil. All right, whether the oil goes up or down, and if we have extreme drops in the market, you will see extreme bearish movement in the Canadian dollar. That's what it is. It's an oil-driven economy, right? And so everything is related to around US oil. Stronger it gets, the weaker it gets, we start seeing market moves. Now, let's go take a look over here on the chart, and let's go ahead and take a look at this details right here. So we're looking at the first leg. Now, price normally goes all the way up to the fourth high up here at the top. So what I normally do is I mark off this level right here, and I mark this level as, let me just go ahead and put it right here. I mark this level off right here as our fourth wave target, right? Now, I call it the fourth wave target, and that's because price is going to chase after that target. And so let me go ahead and mark this off right here. Let's go type it up here, fourth wave target. Oh, hang on. Oh, sorry. This is actually, I'm changing the wrong thing. Yeah, my bad. Why am I changing the intervals here? Hold on a second. This is text. I'm unable to save. Hold on a second here. Give me a second here. So let me do this. I'm gonna place a little balloon here. There we go. And I'm gonna go ahead and say that's crazy. I can't even update. I can't even change the settings here. That is crazy. For some reason, I can't even make a note here. Okay, well, anyways, all right, so I'm just going to go ahead and say, so this is, maybe I should just go ahead and refresh this. Hold on, let me load it. Oh, there we go. Maybe there's just a little issue here. All right, cool. Well, there we go. It's all fixed up now. All right, so what I'm going to do here is I'm going to go ahead and put a balloon here. And I'm going to go ahead and say that this is my fourth wave target. All right, there it is. I'm going to increase this a little bit bigger. There we go. All right, so this is going to be my fourth wave target right here. All right, so which means that I'm expecting price come all the way up here to this level right here. See if I can get a price point on this. Show price range. There we go. Price distance. Nope, it's not showing me there. All right. That's fine. All right, there it is. Okay, so we're looking at price coming up to around about 74.13. Now, the one thing I do see here as well, okay, that I need to pay a little more attention to, is that if we look over here, I'm also seeing divergence. Okay, so let's go ahead and mark that off right here as well. So here is where price is going lower, right? And here is where price is going higher, or at least the momentum is going higher. Okay. So we have price lower, all right, but the momentum is moving up. So here we have disagreement between price and momentum, all right? Disagreement between price and momentum, which is important, all right? And it's important to note that because we're now expecting US oil to go ahead and rally. So we'll be looking for US oil right here to start its rally, okay? And it's all based on this right here, okay? That's the confirmation that we're looking for right there. Now, this is US oil. So if we come back, if we're going to see, now this is important right here. If we're going to see US oil rallying, getting stronger, which means that the Canadian dollar is going to get stronger, and yet we're seeing dollar index weakening, then clearly US dollar CAD would be a great setup. Now, if we look at the daily time frame on the US dollar CAD right now, it's showing that huge indecision candle. So we're going to talk about this on Sunday. We're going to go ahead and post this video on Sunday. I'm going to talk about the opportunity that we're going to look at, but I'm just going to give you a quick overview of what it's going to look like, right? Let's go down to the lower time frame. And by the way, this is how you can evaluate any sort of currency pair that you're trading. Look at both the currency pairs, evaluate it based on how it's set up on the daily time frames, and you can identify whether this is a great opportunities, right? So let's go back to the chart right here. And what I'm going to do here is I'm going to go into the lower time frame, which means I'm going to go ahead and break it down to a 1 hour and see what it's doing on the 1 hour. But I'm going to go to the US dollar CAD right here, and I'm going to pull up the 1 hour right here. And the 1 hour at the moment right now is just showing bearish movement. So there's going to be a pullback. In fact, let me go back. Let me go down to a 5 minute. I want to just show you what I'm looking at right here. So, and by the way, when you're looking at 88 wave structure, it works on all time frames. It doesn't matter if it's a 5 minute, a 10 minute, a 15 minute, a 1 hour, 2 hour, 4 hour, daily, weekly. It doesn't matter. This pattern appears on all. So we can identify how the market's going to wave, when we can expect retracements, and that helps you also with short-term directional buys as well, if you are, if you choose to scalp the market in the day. So if we go over here, I'm noticing here, if I look at the fibs right here, I'm noticing that we had a price move down here, okay? Then it moved up here. After it hit the 1.618 right here, look at this. And just before I get to that, if the market moves past the 1.618, in most cases, we come back and we retest it. Now check this out. Notice right here, notice that price came back up almost to the 1.618 right here. So it doesn't have to come to it by the pip, but it certainly comes very close to it. So this is how the 5 minute has broken down, the swings going down. This is the move that we've had so far. We've had a wave 1, wave 2, wave 3, wave 4 coming back, almost hitting the 1.618, but then testing the 382 bounce on the retracement. And now we're looking for price to break below there and get to at least this level before we see some deeper retracement. So this is what's going to happen. When we get to this price, and let's go ahead and mark that off right here. All right. When we get to this price right here at 28.10, so 128.10, we are then going to look for price to go back up to retest this level right here. And that's going to be my fourth wave right here. I'm going to go ahead and say this is going to be my fourth wave. target. All right, so this is going to be my fourth wave target right here. All right, so that's going to be the fourth wave. Now, if that's going to be the fourth wave, but we have to first get to the fifth wave. So we know right now that we're in a fourth wave sort of correction move. And now we look for price to go down to the fifth wave. So which means at this point right here, this is going to be my fifth wave. Okay. So there's the fifth wave right here. So when price goes down, we're looking for price to go down to around about 128.10. When it hits 128.10, we may see a correction move coming back up again. And the correction move will look something like this. It's going to go all the way up here and try and take out that high, which means that we should get back up to around about 128.74 and then sell off. So what is the opportunity for us as we move into next week? All right. So what is the opportunity as we move into next week? Well, next week, what we're going to do is making sure, number one, that we get a good confirmation on the daily time frame that the US oil is closed out with a good indecision candle. We're going to look at the daily time frame on the dollar index, looking for that indecision as well. And then we're going to go to the currency pairs that are traded against the dollar and the Canadian, and we look to see if we get similarities. You can see if we get the same sort of signal and confirmation that prices hit a support or a resistance level. And if it has, we're then going to go ahead and trade it. So what I'm going to do is let's go into one more example. I'm going to go ahead and take something that is not US and Canadian based. So we're not going to look at the US dollar CAD, but we're going to look at either one of them, either US based or Canadian cross. So either the US cross or the Canadian cross. But let's take a look and see. So let's go to the charts again, and let's pull up something that's a little different. We can look at New Zealand. Let's go take a look at the daily time frame. And I'm going to just flip over to a couple of charts and see which one's really looking good. Well, New Zealand CAD, we can see here that we're expecting New Zealand CAD to break out of this support right here. It's and if we get stronger Canadian dollar, then yeah, we could be on our way back down. With that indecision right here, we could be done with this consolidation and looking to come back and retest this trend line and then break down to the downside again. So there's a possibility there. Now, some of you might say, well, big dog, I don't like trading this when it's in a range. That's okay. Then just stand aside, don't do anything on this particular pair, right? But this is something that may be coming up. So New Zealand CAD could be an opportunity for a breakout. Now, let's take a look here. What about pound US dollar? I have spoken about pound US dollar. Let's take a look at pound US dollar. Ooh, look at that. All right. So let's do a little bit of a cleanup here. And let's clean up all of the details here. And let's take a look and see what we've got here. Okay. So if we take a look at the these pound US dollar right here, the one thing we need to go ahead and do is firstly go ahead and put in some support levels. All right. Always good to go ahead and put a support level in here, just so we can see what price is doing at those levels. Now we can see that we do see that price is stalled around about here. Okay, and we do have a good support level there. Good support right here, and yeah, we're getting another support there. So there's a good level of support coming off there. If we go down here, we are seeing, look at the oscillators. The oscillators are moving higher. See, even though price has moved lower, you see it moved lower, or at least from here at least. It's moved from that point, it went lower. And we actually, I think we did take out the low. Let's take a look here. No, we did not. Okay, so we didn't take out the low there. So this is actually a good sign because here we had positive divergence here. Okay, so if you go ahead and put in here, from there to there, there's your positive divergence right here. Okay, and price did go bullish right here. Now with price going bullish there, right, we had that rally. Now we're going to look at this and say, oh, well, now we've come back. Should we now start looking to go ahead and sell? Well, with this indecision here in today's trading, okay, despite of the big move, we still want to go ahead and trade bullish above this level of support right here. So as long as it stays above this low right here, we absolutely want to go ahead and start buying long. So if I look at this right here and I break it down, I'm going to go ahead and put some more trend lines in here. All right. That trend line is not helping much if I put it in there. Now, that's not going to help me much. So if it's not going to help me, kill it. All right. It's just getting in the way. So let's just kill it. So this is, we don't have that, but we do have a crown pattern. All right. We have a crown pattern that shows right here. Take a look. This is a beautiful crown right here. Well, it's not a beautiful crown because here would be the left tip right here. And so price did go below that, so we're getting a little bit cheaper. Now, the good thing about the setup right here is that anytime the market moves this far back and doesn't take out the previous low, it is considered to be a very good wave 2 entry level. All right. Now, let's go ahead, and that's based on idiot. So if I'm going to go and go ahead and take a look at this swing from there all the way up here, we can see that the opportunity here, and this is what's great about the pound US dollar, the opportunity, and I'm going to go ahead and also draw in my horizontal lines here at the top. Let's go ahead and do that as well. Check this out. I'm going to put in here level of resistance right here. Now, notice that the 1.618 is matching up with that, so which means that anywhere we buy in right here, we may look for the price to go back up here. So what Sunday may present ourselves for the pound US dollar is buying opportunities down here. So if we go down to the 1 hour time frame and we look at the 1 hour time frame on this, you're seeing already a bullish candlestick right here. We're noticing that pound's moving against the dollar a little bit right here. It'll get a little stronger. And so this is just the early stages. And so when you look at this type of trade opportunity, what's nice about this is that you can start adding onto your position. You can start saying, hey, I'm just going to get in on something right now. Not put a whole bunch, but put something on it. And if the market takes off, it takes off, and you're in on a trade. But if it comes back down, still doesn't take out the low and gives you another bullish signal, you can go ahead and add onto that position. So every bullish signal that you get above that low, all right, so it's got to be below, above that low. Any bullish signal, we can go ahead and add onto that, making sure that if the market does break that support, that you can go ahead and liquidate your position and get the heck out of Dodge, right? So at this point right now, it's creating buying opportunity on the pound US dollar. So remember, we've got good signals on the dollar index. Its price may move down. We're still waiting for confirmation though, but we've got a good indecision candle that's coming up today. We've got some good confirmation on the pound US dollar, also indecision, and it's at a support level that we can go ahead and buy at. I think that is a great opportunity for us as we move into next week. So again, these are the type of things that we're going to be looking at as we're heading into next week, making sure that we have the perfect setup based on confirmation, resistance, support, and maybe even indecision, because indecision actually confirms support and resistance. If you have an indecision candle at a support or resistance level, it gives us a lot more confidence that this market is going to turn at those points. So with that being said, traders, once again, I want to remind everyone, if you enjoyed this video and you want to see more content like this, go ahead and smash the like button, but also subscribe to the channel as we go ahead and send out some more content on this. Have a great weekend. Have a blessed weekend, and I'll see everyone back again in the next video. Thanks for watching. This is the Epic Big Dog, signing off.